So in this video, I'm going to be talking about volatility index and what it means for you as a trader or as a would-be trader if you're still learning. Now, before I go into that, I need to say this. I'm not a financial advisor and I'm not claiming to be one. Whatever you're going to get from this particular video or any other video I'm going to make in the future, they're all my personal opinion and I'm not trying to advise you on what to do with your money. So what is volatility index? Volatility index is like a fear gauge of the market. So let me go to volatility index here. You can see it on the tab for index. You can see this is on a daily. Let me change that to weekly so that it will be, I'll have a smaller number of candlesticks to look at. So you can see what's happening here. So today, volatility index has been up by 9.86. So since I say that is the fear gauge of the market, and if it has been up by 9.86, it means that the fear in the market has been up by 9.86. I mean, this is just a percentage number, but it gives you an inkling of what is actually happening in the market at every given time. But another thing that you should always bear in mind is that the volatility index is inversely correlated to the stock market. What does that mean? It means that when it is up, the stock market is down, and when it is down, the stock market is up. You get that? So very, very simple, very easy to use. And what you can do as a trader or as a would-be trader is, if you want to place a trade, before you place that big trade that you've been looking at since the past 3 weeks or 1 month or whatever, before you place that big trade, you can open up your chart. Most platforms will have a VIX index, also called VIX, and it's also called fear index. Most platforms will have it as VIX. So you open up your platform and look at what the index is looking like for the day or potentially for the week. So last week, as you can see, let me expand this a little bit. So this candlestick here represents a week. This was last week. Last week it was down, and this week is up. And let's now look at what is actually happening in the market. If I click on shares, you can see, yeah, there's a lot of red. Predominantly, you can see loads of red days. Now, obviously, you can also see some blue ones, but the volatility index has actually started recovering, in the sense that it has actually started coming down. It was up by 14% before. Now it's about 9.68. So it does make sense that some of these companies, some of the shares are now recovering. And as you can see, let's look at here, around here, if you can follow my cursor, around here, this was March, 16th of March 2020. This was when most Western countries went on lockdown. And let's check some of the stock. Let's look at Apple, for instance. Another thing I want to also say is that the VIX index or volatility index, whatever you want to call it, is predominantly tracking the stock market. It has little or nothing to do with the forex market or with currencies. So if you are making a decision, if you want to trade stocks, any stock, yeah, especially in the long term, even in the short term, you should know where the fear gauge of the market is at every given time. So let's look at, I'm going to add Apple here, and let's have a look at, let me change this to weekly. Let's have a look at around March, that same period. So February, March. So you can see this is March, and you can see March 16. If we go back to the VIX, March 16, it was up a lot. So you can see that inverse relationship that they have. So when volatility index goes up, most of the stock market actually goes down, and when volatility index is down, most of the stock market is up. Now, Apple being a tech company, what you can also notice is that Apple continuously kept going up, and then the overall trend on Apple is an upward trend. It's a very strong company. It's the most valuable company right now, about 2.1 trillion US dollars. So it does make sense. But then the reason, as far as I'm concerned, my opinion, the reason Apple is the way it is, and predominantly most tech stock companies are going to be like this. Their charts are going to be looking like similar to what Apple is looking like. The reason why that is because most of them, they have WFH infrastructure. So when we went on lockdown, most of them had the ability to offer services that would enable people to work from home. So they didn't entirely close up, but they all they all continue to function, and that is why their stocks are up. But then if we take a look at something like something that has nothing to do with tech in particular, let's say something like International Consolidated Airlines. I mean, that's an airline. Obviously you would know what's been happening. If there is lockdown or most countries are going into lockdown, people are not going to be traveling. So you can see, let me add this to workspace. You can see March. Yeah, you can see March 17. You can see that downward movement. And if you go on the VIX, there was an upward movement around the same time. But let's look at another example, because I like to have multiple examples for people to actually start understanding how this works. This is Rolls-Royce, the luxury brand. And let me change this. Okay, it's on weekly already. So Rolls-Royce, February, March, you can see that downward movement. Now, having said that, you always have to bear in mind that it's not just the VIX that this is not the only thing that you have to look at if you want to trade stocks, but it is one of the most important things you should actually look at. Because if you look at this Rolls-Royce, even when the market recovered, even as the market is recovering, because the world economy is still recovering, Rolls-Royce has been going down. So there are other internal factors within the companies that could actually be pushing the stock down that has nothing to do with the VIX. But the purpose of this particular video is to let you or teach you or make you understand the value of looking at the VIX index every single time before trading any particular stock. So this is the VIX index, VIX. Most of your brokers will have that. If your broker doesn't have that, maybe you can ask them about it. They can add it for you. For you on the platform, or they wouldn't. But you can also contact me and ask me for a broker that is good enough and regulated enough to obviously have some of the good indexes, good companies that you should be trading on. Now, let's go back to some of the things that I did in my previous videos. In my previous video, I talked about selling Heidelberg Cement. Heidelberg Cement, I'm just looking at the performance now. So the first week, last week, I made the video on Monday. Throughout the week, it was up, which you can see here. If I expand this, throughout the week, I said I was gonna sell. Throughout the week, it was up. I think what I did was I sold for 100,000 something. So even though it was up, I was losing some money, but it wasn't a lot. So I kept my position. And today, being Monday, it's just been down by 2.83%. Hopefully, it's going to come down to that 56 area. I did mention this in my second video that I'm selling till 56 is still at 59. Need to come down at that 56 area. Now, the next thing I want to talk about is GBP USD. This is a particular currency pair that I actually like so much. And last week I made a video. This is on a daily. I made the video on Monday, the 14th, and look at what happened throughout the week. So you would have made a lot of money if you followed, if you decided to do what I made mention of in that video. You would have made a lot of money. But look at what's happening today. So the reason why this is happening is because there's no traction, within the deal or the negotiation that is ongoing right now between the UK and Europe. There's no positive traction yet, and that is exactly what we are all waiting for. My own personal view of GBP USD in particular is that it is so undervalued, underpriced. So I believe that this particular currency should be up to 1.40. Let me change this to monthly. Maybe I'll be able to spot where 1.40. So I believe that the currency should be around here. That's the price. This is on a monthly now. I believe it should be around here. So being the fact I believe that what I've been doing is I only buy whenever the geopolitical event is in our favor. So We are waiting for any sort of news pertaining to the ongoing negotiation between the EU and the UK. Now, having said that, what I actually think is whether it's negative or positive. Yeah, if you watch my very first video where I talked about GBP USD, I talked about the fact that even if it's negative, I believe it's going to fall out to this level. And as you can see, the last time it fell dramatically, it went down to 1.3139, which was exactly where I put this particular rectangle. It fell to that point and it gone back up again. It attempted falling today. It gone back up again. So even if we get a negative, like a negative situation, will be the UK not getting a deal from the EU. So even if we do that, what I believe is that that would give us some level of certainty in the market. Yeah, because the market does not like uncertainty. That will give us some level of certainty in the market, and then this would actually start shooting up back to where I predicted it's going to be. Does that mean that I know everything? I think the jury is still out about that one. So that's it today. Read more on volatility index. Try and look at your charts and look at the index and see how it correlates, or how is a contrarian to what has been happening to some stocks. So whenever it is up, the stock market is down, and whenever it is down, the stock market is up. So what you can do is what you can see what's happening today, and the question is now, why is the stock market down today? The first, we are in the middle of, we are getting to the end of December. Why is the stock market down, and why is the VIX up? There are so many reasons that could be, and you can do your own research on that, and then learn and then make better decision when you are doing your trading.